there is still the macro slippiness here, isn't there? That macro slippiness is still very, very obviously visible for everybody. Yeah. So that turned out to be a great trade. We went 71s. We actually traded a low price there, guys, of 67 for 4 points, $200 a contract. So that was pretty good, right? Anyway, so you can see what happened. So the book went bearish. The market started to slip on the sell side. The buyers are now stuck in this area. There's the stuck again there. So we started to sell into that buyer, and we just ripped a very nice profit out of them, right? We ripped another nice profit out of them. Buyers massively exposed on the uptick again there, guys, at 70, 71s. And another easy sell. I'm going to get my stops in at break even again on that sell. And I'll see if it's got any more to the downside. But buyers, again, massively, massively exposed on the upside here. Market maker says, cheers, mate. I said, cheers, mate. Give me some of that. Can I have some more, please? And down she goes. Down she goes. Crazy, crazy, crazy. Will they ever learn? No! They're idiots. Well, they'll learn when their account finally goes away, doesn't it? When the account vanishes into a puff of smoke and they go, what happened? Well, you just got done by the market, mate. You just got done by the market because you were being an idiot. That's what happened. So that, another sell there, another profit. And I'm just booking into this drop since it's starting to get a little bit sticky at the bottom edge again. So I'm going to book some money into the 67 halves. And that was a sell trade at 70 halves down to 67 halves. And 3 more points. 3 more points, another $150 on 5 contracts, another $750. Beautiful trade. What an outcome. What an outcome. You can see, sorry guys, I've closed out that position, so I'll take a quick screenshot. I haven't got a trade on this one, you can, because I've just closed it out, but it's basically the trade that we were doing in these early stages anyway, so it's just the same trade. But you can see what the dealers did again. You can see how clear it was in terms of that last sell. I mean, this is scandalous, isn't it? This is actually an atrocity. Not really an atrocity, but you get the basic idea. In trading terms, it's an atrocity. That buyers came in so aggressively here. Buyers came in so aggressively here. The market's sticky on the upside. And you can start recognizing they're getting stuck in here, aren't they? They're atrociously badly positioned in these areas. And obviously they're atrociously badly positioned in that area. And we just rip another sell right into the trade. It makes sense? Now, I've been trading these order flow trades and I've been trading Jack Ryan trades pretty much the entirety of today in terms of NinjaTrader. You've seen, I think we've probably showed you about 50 trades. I've got an awful lot of screenshots. I've copied over some of the screenshots. In terms of NinjaTrader, this is how the account stands at the moment in terms of NinjaTrader. Just today, just trading these things with 5 contracts, guys. I mean, that's ridiculous, isn't it? It's absolutely ridiculous, but it's ridiculous because of the volatility in the marketplace. It's ridiculous because every swing is big money swings. You know, and obviously the buy side squeeze was worth several $1,000s on a 5 lot. I mean, just a buy squeeze, that was buying at a higher price, several $1,000s on the 5 lot. And it's just never ending cash that's just pouring in through the channels at the moment, guys. It doesn't matter what trade we take. It just seems to instantly make money at the moment. So stickiness is on the tick. Yeah. So we're just looking at the macro stickiness and we're looking at the micro stickiness. And, you know, in the background to that S&P trade, sorry, I'll get rid of that. We'll go back to that screen before. So you can see on this screen here, there's macro stickiness on this top line, isn't there? And there's been kind of macro stickiness on this top line since the beginning of this whole trade here. So if I was to look at the S&P on a macro chart basis, and I says, what is the storyline of the top edges? It becomes quite clear what the storyline of this top edge has been ever since 3:30. Bearing in mind, this is a 5-second chart, guys, a 5-second chart, right? So based on a 5-second chart, can everybody see the stickiness that's coming in those top lines? Is that visible, guys? So take a look. There's the tick delta running through that phase there. Yeah. There's the tick delta running through that phase there. So what about the buy side here? What about the buy side there? Well, that's what you're looking at in here. Yeah. All these buyers into those top lines keep getting jammed, don't they? Every time they come into these top edges, they keep getting jammed into those trades. Now, obviously, when the market starts getting a little bit stickier on the bottom edge, you can see they're not actually bearish. They're actually quite happy to rotate here inside of that story. But that's okay, because if they get too bullish, they'll rotate it down. And if they get too bearish, they're rotating it back up again, aren't they? You see what's happening? So if they get too bullish, and they obviously got very bearish here, so what did they do when this market got bearish? They rotated it up. And what happened when they got bullish? They rotated it back down again. What happens when they went kind of bearish here? They rotated it back up again. What happens when they went bullish here? They rotated it back down. What happens when they went bearish here? They rotated it back up. And then when they went bullish here, you're imagining they're going to rotate it back down again on the right-hand side here, right? So you're imagining they're just going to rotate this price straight back down as soon as the market goes against the narrative here. That makes sense in terms of the order flow here, guys. We're not using it in terms of the same expression here, Sam. We're using it. We're not using it in terms of the gammas, sticky and slippy. We're using it in terms of how the market makers, in terms of the futures, are sticky or slippy. And the market maker in terms of sticky and slippy is simply what the tick is doing against the deltas. Yeah, make sense? So it's not the same stickiness that we're talking about when we're talking about gamma stickiness or slippiness. It's a different stickiness and slippiness that we're talking about here. But remember, we just said that we would imagine that they would take this price down. Remember, we said that, but when we took that screenshot, guess what happened next? Can you guess what happened next, guys, when we said they would take this price down? Is that difficult? They took the price down, didn't they? Come on, guys, it was a live screenshot. It was a live screenshot when we said that they will take this price down. And we took that screenshot when the price was coming back up to retest here, because we started to identify this area here, and we says, look, they're going to take this price up to take it back down again. They took the price up to do exactly what we said they were going to do. They took the price up here. They went slippy for a brief period of time there. And then they stuck it hard, really hard into that top edge, didn't they? And obviously, as soon as you can't sell it on the way up because that's slippy, right? But when it starts to slide back down, those buyers are still in play here. Those buyers are still overcommitted in that area. Take advantage of them. Take advantage of them and work into that sell trade at that point. Try and grab a bit of that money as it comes off the table there. You know, and as they start selling, if they oversell it, you know it's going to flip, right? If they oversell it, you know it's going to flip off of that price. And they're going to flip it back off the bottom edge here if they oversell into that bottom edge. Now, I don't think they have oversold on this occasion, so there might well be a chance that this might be the sell continuation that you're looking for. So we're watching the pullbacks on this occasion to see if we can actually get a press into this. Because the same things happened. They simply are just buying net every time. So the market maker's job is not finished here. The market maker's job is to try and get that price down, get some sellers in play, and then take the market back bid against that seller. So we're watching for that setting up at the present moment. How are we doing in classroom time? Okay, a little bit late for starting classroom, but we'll get started anyway, guys. Let's do a recap of what we